Hi, welcome everyone. I'm Milan Vaishnav. We are again here to take a short look on the markets and try and find out some stocks which can give us some respite from the weakness that we are witnessing over the past many days. If we take a broad view on Nifty alone, then the markets have not at all been good over the past many days. In fact, speaking of Nifty, then we can observe that over the last 6 to 8 trading sessions, Nifty has lost close to, in fact, more than 1,000 points. So, for equity investors or even for the traders who prefer long only kind of trades or investment, it really becomes difficult for them to find out some good stocks, some good picks which are resilient in their relative performance against the markets and offer us some defense, some protection against the unabated weakness that we are seeing over the past days. So in this short video, I've tried to find two good stocks in bad markets, so to say. And for this, we will be using the classical concepts of relative strength index, that is RSI, and also we'll use the concept of RS, that is relative strength. Before we begin, it's always good to take a broad look on the market, take a bird's eye view on that. So speaking on YTD basis, it is quite evident that both Nifty 50 and the Nifty Bank, which are the two main broad indexes in the Indian markets, have lost close to 8.28% in case of Nifty and 4.75% in case of Nifty Bank on YTD basis. But one of the worst performers of 2022 is the IT index, Nifty IT, which has lost close to 23.94%. Again, this is on YTD basis. So now when the markets are declining as if there are no bottoms to it, and with the Indian rupee being the weakest in its lifetime against the US dollar, we spot two IT stocks using the concepts of relative strength and relative strength index. So let's move on to see which are those two stocks. The first pick is Sonata Software. And Sonata Software, we are seeing some classical developments on the RSI, which I'll show you here on the charts. RSI basically it's a lead indicator, so the signals that appear on the RSI, they tend to appear first before they appear on the actual price. So RSI also appears, it also submits itself to the regular pattern analysis and kind of pattern analytical stuff, exactly the way we do it with the price. So being lead indicator, we will see that the support, the breakouts, the violation of support or the penetration of resistance, etc. If that appears on RSI, it can give us a lead indicator of what the prices are going to be like. So in a way, we can say that the price follows the RSI. Looking at the Sonata Software chart, Sonata Software has respected this lower trend line for multiple times over the last 5 to 6 months and has taken support on that. After a brief violation here, it is once again above that, and it has been able to maintain its head above this important support. What we see here is the bullish failure swing on the RSI. RSI had slipped below 30 and had gone into the oversold condition, and it has now crossed above 30. While doing so, it had made a pullback, it went down again, it did not violate the previous low point. The RSI did not violate the previous low point, and it has once again crawled above 30, and this signal is known as a bullish failure swing, and it qualifies for a fresh entry. So coming to Sonata Software, using the most recent low of 627, using the levels below the most recent low of 627, a fresh entry can be considered with the target of 700 plus. The second stock which is on our radar is SCL Technologies. Again, instead of just the RSI, we will be using and applying concepts of both the RS and the RSI. So let's first begin at the RSI. We see that the price has been making lower bottoms while the RSI has not done so. So this has resulted into a strong bullish divergence of RSI against the price. With the price making lower lows and with RSI not making lower lows, it has resulted into a bullish divergence of RSI against the price, and this usually defines a period where a stock or index finds its a potential bottom and tries to form a base, and then it inches higher. Another signal that appears is that of relative strength. Here we see that the relative strength, which was declining, has changed the trajectory and it has started to move higher. In the process, it has also crossed about the 50 DMA, which acts as a confirmation when it comes to the relative performance of SCL Tech against the broader market. This RS line is against the broader Nifty 500 index. So if you take the reading of the bullish divergence of RSI and also the penetration or the change of the trajectory of the RS line against broader markets, we can fairly consider an entry into this stock. We can take the levels below 1020 as a stop loss and can consider entering into this stock with expected targets of 1112 to 1130. At this point in time, again I would like to reiterate that if at all the entries are triggered and if you take a trade, keep very strict stop losses in place, because when there is global weakness, there are times when technical levels tend to get violated, even if it is for a very brief period. So if a position is taken, I would reiterate that you monitor it very closely and keep your most technically suitable stop loss in place. I would also like to say a word when it comes to defining the difference between RS and RSI. Many people tend to make a mistake here. RSI that we discussed both in case of Sonata Software and HCL Tech. RSI is something. It's a kind of the strength of the move in the stock, which is measured against its own self, and usually with a default look back period of 14 days. 14 period, I would say, because if you are using weekly charts, then it's 14 week. If you are using daily charts, it's 14 days. So RSI, using RSI, one would measure the strength of the move of the stock against its own self, usually over a 14 period, look back of 14 period. Whereas RS is something that we compare the stock against the other stock or against the index, where in case of SCL Tech, we compare the stock or the move of the stock against the index, the broader market index of Nifty 500. And since the RS line was rising, HCL Tech is expected to relatively outperform the broader market. So this was the brief concept. I would encourage you all to visit the site, and if you have any questions or comments, you can leave them in the comments below. I would be back again with a similar video in a couple of days. I hope you have enjoyed this. Thank you.